Hi, I'm Ernie, and this is the 65th video in Puritas Springs Software's FAQ series. Incidentally, when Larry Housel and I started the Chat GPT series, our FAQ numbers fell out of sequence, and the upshot of that is that this may not be the 65th video according to publication date, but we're calling it number 65, and I'm sure the numbers will eventually resolve themselves as time goes on. This video deals with U.S. estate tax, specifically the issue of portability. What is portability? Well, in 25 words or less, portability allows a surviving spouse to use the unused portion of the deceased spouse's estate tax exemption. Now, that's a beautiful, it's succinct, 100% correct definition, but I'm sure an example would add some light on the subject. So I'm going to introduce you to John and Mary, and I will bring up a Form 706 that I primed with their information. Let's see if I can do that. There we go. And now I'll open the John and Mary return if I can find it here. There we go. And it's already primed with their information, basically. They're a married couple. They're both U.S. citizens. We're going to assume that John passed away in 2023, and therefore we're doing a 2023 Form 706. The date of death is actually irrelevant from the standpoint that the technique doesn't really change from year to year. It's still pretty much the same, so we're assuming that it's a 2023 form that we're filling out. At the time of his death, the basic exclusion amount, which we're going to refer to as the BEA, was $12.92 million. John's taxable estate at the time of his death is worth $7 million. John made no taxable gifts during his lifetime. Mary is still alive and has her own assets. She'll be the one completing John's 706 form. At the time of John's death, here's what happens. His will bequeathed all of his assets to Mary, and since transfers to a surviving spouse are generally eligible for the unlimited marital deduction, no estate tax was due upon John's death. There's a substantial however involved here because John's estate did not use all of the available $12.92 million estate tax exemption. He only used, what did I say, $7 million of it. So between what she already owned and what she inherited from John, Mary is going to find out that her estate exceeds the $12.92 million exemption. And that's where portability comes into play. When John's Form 706 is filed, portability allows the unused portion of his exemption, and that unused portion was, in our example, was $5.92 million. That would be the $12.92 million exemption allowance minus the $7 million of his actual estate. And that's going to be transferred to Mary, that $5.92 million. And that allows her to use it in addition to her own exemption when she passes away. Now, here's how, you're just looking at I think the top of page 1 now with the Form 706, but here's how the scenario transfers to the actual form. First, you determine John's unused exclusion amount. The calculation looks like this, and hopefully the production or editors will pop it up on the screen right now. And it goes deceased spouse's unused exclusion, which they call DSUE, is equal to the BEA minus John's taxable estate. And that's exactly what I said before. In our example, that amounts to DSUE equals 12.92 minus 7. And so the DSUE is ultimately equal to 5.92 million. Now here's how that's handled on the forms. You begin by completing Form 706 as you normally would, and we have a demonstration video on filling out the typical 706. You might take a look at it. And you know what, I'll pause just a couple of seconds here to see if the editors want to put the link on the screen. And anyway, after the return is completed, you want to look at page 4 of the 706. Let's do that. I'm going to go to page 4. And you know you're in the right spot immediately because the title is Portability of the Deceased Spousal Unused Exclusion, DSUE. Let's take a look at that paragraph there that starts out the form. It says, a decedent with a surviving spouse elects portability of the deceased spousal unused exclusion, the DSUE amount, if any, by completing and timely filing this return. No further action is required to elect portability of the DSUE amount to allow the surviving spouse to use the decedent's DSUE amount. Well, what that means is that the election is going to happen automatically when you file the return. You've got to opt out if you don't want to preserve the exclusion. You know, offhand, I'm not sure why anyone would ever want to do that, but I'm sure there are valid reasons. I just can't think of any right now. Now, normally, I don't know, if you're like me, I'm suspicious of things that you have to opt out of. Because you always find out by getting a bill in the mail. Trash collection went from $50 to $250 a month, or the cable TV bill went from $49 a month to $179 a month because you didn't opt out. Well, that's not really so with the DSUE. That's not too tricky. Preserving the unused exemption is automatic, and that's probably a good default situation. And you can see Section A right below what I read. There's the checkbox for opting out. And the next thing on page 4 is Section B. That QDOT is about qualified domestic trusts, and that's not part of this simple scenario that we're going through, so we're going to move right to Schedule C. I'll scroll it up here a little better there. Schedule C, that's the meat and potatoes. Here's where the unused credit is actually calculated. And you can see it starts out, you know, exactly like we showed you. 12.92 million minus the 7 is 5.92 million. There it is. You can do it in your head, but here it is on page 4 if you want to see it in writing. And you might be, if you're peeking down below that, you might be looking and saying, well, what about Schedule D? Well, that's for a situation where the deceased spouse, that would be John, had several predeceased spouses of his own from which exclusions have been unused. And that allows them to be all summed up. And I suppose that comes up, or no, I should say the exact opposite. I don't suppose that comes up a whole lot. And I'm not going to get into it now. It's hardly more than repeating the DSUE calculation for each deceased spouse and then passing it along. So, in summary, John's executor, Mary, would file Form 706 for John's estate, even though no estate tax is due, because this is the form where the election is made. And you know what? This is more like this video, I should say, is more like one of those commercials where the guy yells out, wait, there's more, because at this point, we're only halfway done with understanding the benefit of this calculation. I demonstrated how to calculate the DSUE, and now I'm going to show how to use the unused exclusion. Time marches on. Mary passes away in the distant future. We'll assume that the BEA is still $12.92 million, and her total estate is worth $16 million. Now, thanks to the portability election, Mary can use both her own BEA, $12.92 million, and John's unused portion, the $5.92 million. And, okay, just as an aside, remember, I'm assuming that when Mary passes away, the lifetime exclusion is the same as when John did, $12.92 million. But because that amount is adjusted annually, our assumption about Mary's lifetime exclusion is very likely to be an understatement or an underestimate. Anyway, here's how her calculation would look. Total exemption available to Mary equals the BEA, her own, plus John's unused portion. So that would make the total exemption equal to 12.92 plus the 5.92, puts her total exemption at 18.84, and that puts her in a position where she won't owe any tax. Whereas if all she had was her basic exclusion amount of 12.92, she would have had a tax liability. Pretty simple stuff. It's not that hard. And that's it for portability. Past, present, and future. And that's also it for FAQ number 65. But before I go, I'll use this chance to mention a new book that I co-authored with Larry Housel. It's called Chat GPT and the Law, a comprehensive guide to AI in law offices. You can order it from our landing page. The link is in the description. And it's also available in the Amazon bookstore for $12.95 in digital format and $15.99 in paperback. As always, don't hold back. Feel free to like, share, and or subscribe to the Puritas Springs Software channel for additional videos created especially for you and for law offices. Also, in case you didn't know, Larry and I have a YouTube series that deals specifically with Chat GPT, and it's a great companion to our book. Finally, if you subscribe to our YouTube channel, you'll receive notifications when new ones are released. Larry and I welcome new viewers, and we love hearing from old subscribers. We're happy to have you along, and there are good times ahead. It'll be pretty thrilling because there are exciting topics to cover. So stay tuned, and don't shy away from the like button. We thank you for it. Until next time, stay healthy, safe, and happy.